The Nifty is opening about 49 points lower.
From the day's low, we managed to recover close to about 70 points on the Nifty. So right now, as we speak, we're down about 0.5%.
It's a market which is very resilient over the last couple of months. You've thrown everything at it, inflation, recession, whatever. Today, even Putin, and nothing seems to sort of worry the market. The Nifty is going home with almost 100-point cut. The Bank Nifty down 260.
Well, it was a 100-point cut for the Nifty, but given the sort of volatility that we had and given the sort of events that have been lined up for us, one would say that it was an extremely resilient performance. Hello and welcome to CNBC-TV18. You're watching us here on Markets Today. This is a show where we track about 6 hours of day's trading action in 5 headlines. I'm Mangalam Malu. Let's talk about all the headlines. Stock markets tumble across the world after Putin signals an escalation of the war in Ukraine. Sensex and Nifty end lower in the volatile session. The rupee weakens against the dollar and closes shy of the 80 mark. M&M buys out over 17% stake in Swaraj Engines from Kirloskar Industries to make it a subsidiary. The move is a win-win for all businesses. Central bank jumps after it exits prompt corrective action by the RBI, the framework, and now a stronger Yes Bank also perked up after its board clears the sale of nearly 50,000 crore of weak assets to JC Flowers ARC. Sebi chairperson Madhavi Puri Booth says that the regulator won't allow products that curb exits or exchanges to charge for public data. Also adds Sebi is open to innovations like algo trading, but the process must be transparent. Triveni Turbines tells CNBC-TV18 that marquee investors along with the promoters have bought near 22% stake from the associate Triveni Engineering as a part of group reorganization. Stock perks up. And let's tell you what we have for you on the show today. It's a packed show. In Market Opinion, we have Jamie Dimon, who's the chairman and CEO of JP Morgan Chase. And in Big Corporate Voices, we have Rajiv Rajgopal, the MD of AkzoNobel, another stock that did well in today's trading session as the management talked big about the margins and market share. With that, let's talk about the stock market itself. That was under pressure. It was a volatile trading session. So across the world, there was weakness as Vladimir Putin signaled an escalation of the war in Ukraine. Investors are also awaiting the key US Fed decision later tonight, where nearly 75 basis points rate hike has been priced in already, with an outside chance of about 100 basis points as well. The Nifty slipped over almost 100 points in today's trading session, snapping a 2-day gaining run. Banks and mid-caps also closed in the red. We have Anuj Singhal joining in with the market wrap.
Well, the market was a bit nervous today. A couple of events which sort of scared the market. First was this aggressive speech from Russian President Vladimir Putin in the morning. That sort of rattled the global market. And of course, ahead of the Fed event, the market was a bit nervous. Even though 75 basis point rate hike is factored in, the market's worried, what if it could be 100? Anecdotally, though, the markets normally move up after the Fed meets. So let's see how things move up. In terms of individual names, the Adani Group was under serious selling pressure today. Adani Ports from the index was down quite a bit. Adani Enterprises and the recent acquisitions, Ambuja and ACC, both were down, where, of course, there was pledge of equity. In terms of other stocks, we had Shree Cement, IndusInd Bank, Larsen & Toubro, Bharti, Tata Motors, and then the IT biggies, TCS and Infosys, both very close to 52-week lows. On the upside, it was the FMCG pack. ITC did well, Lever was doing well, and Britannia was the other stock which had some gains. As I said, tomorrow we'll react to the Fed outcome and tomorrow's expiry as well, so could be a very interesting day.
Could be a very interesting day indeed. Anuj, the big newsmaker of this evening, however, the world's biggest bankers, one of the world's biggest bankers, is warning of a recession but is upbeat about India's prospects. And that's exactly how the markets have behaved as well. We've kind of decoupled from the global markets right now, outperforming at every given opportunity. Jamie Dimon spoke with CNBC-TV18, Shireen Bhan, during the company's India Investor Summit. Dimon pretty much ruled out the prospects of a soft landing for the US economy and said a mild recession or a hard recession are actually the only likely scenarios.
One thing I could project with certainty is volatility in the markets. And because you can't have all this turbulence, this is going to go on for a while, yet you don't know where rates are going to change. The dollar is very strong. America is still strong. Is it going to be a recession? What's the real effect of QT and getting rid of negative rates? Europe is probably going to recession. that creates huge amounts of volatility. And unfortunately, that kind of volatility, I mean, you look at emerging markets and the strong dollar, you have to go country by country. You have people like America who want to be your ally and partner in many more ways. And then I think you have a little bit of a gift. This is not, what I'm about to say is not anti-Chinese, but as every nation looks at, and every company looks at supply chains, they're going to have to diversify more. And a lot of people say China isn't as secure a supply chain and therefore have to move manufacturing to somewhere. And I think India could be a huge beneficiary of that. Absolutely, you should ask me, you should fight for it. And I can't get involved in that because research is independent. So by law, but if I was India, I absolutely would be part of it. And if I didn't get in, I'd ask why. And then I try to accomplish those things, get in. And so I'm hopeful for you. And it is a sign of a country, coming, growing and becoming bigger and better well known. And once in indexes, the other thing it does for you, it's always out there. So you can get, you get a lot of foreign direct equity investment. This one you get also foreign direct credit investment.
All right, we get that. And that's not all. We got some market opinion coming in from our domestic, fund managers as well. Tushar Pradhan, who's the CIO at HSBC Global Asset Management, said that the Indian economy is showing strong growth. He added that corporate earnings are only expected to grow from here. And while India's fundamentals are strong, it's a global environment that's a dampener, no different from what a lot of people have been echoing.
We continue to remain a domestic-focused economy. And our economy currently is showing all signs of pretty strong growth. And as a result of which corporate earnings are also slated to be pretty significantly higher than last year and expected also to remain strong in the next year. So the fundamentals are good. The problem always with the markets is not only just the fundamentals, but the external situation as well and the global environment. India, on the other hand, being a domestic economy is slightly insulated from all of this. Of course, markets can never be insulated, but at least economy is the way they go. They are slightly insulated to an extent. So I think it's a combination of the fact that the fundamentals look good, the money is coming in after a long hiatus, which is the kind of outflows that began in November of last year.
All right, with that, we move on to the second headline now. Kirloskar Industries and Swaraj Engines were the stocks that were in focus, surged 6 and 10% respectively after M&M said that it would pick up 17.5% stake in Swaraj Engines from Kirloskar Industries for close to about 300 odd crore rupees. What does this mean for these three companies? Sonia Shenoy joins in with the details. Sonia, seems like a win-win.
So let me start with Swaraj Engines, right? Because that's the stock that's moving quite a bit. It's up 12% right now. It's hit a 52-week high. As you rightly pointed out, M&M already owns stake in Swaraj Engines, but now it has bought an additional 17.4% stake from Kirloskar Industries for 296 crores. Now with this, Swaraj Engines becomes a subsidiary of M&M. And hence M&M gets complete control of Swaraj Engines, which is a big positive for the company. In any case, Swaraj Engines, as we know, was supplying engines to the farm equipment business for M&M, so for the tractors. And the company has done very well in the past. In fact, the revenues were up 15% just in FY22. And the last 3 years, the revenues for the company have improved substantially. Now that M&M will have complete control over the management, etc., it is a big positive for Swaraj Engines. Let's move on to Kirloskar Industries. Now, Kirloskar Industries is the holding company of the Kirloskar Group. They will get 296 crores for selling the 14.7% stake to M&M, and they'll get about 300 crores on a market cap of 1,600 crores. There's also a holding company discount that Kirloskar Industries is trading with. So that's the reason why that stock is up. Now, for M&M has been making all the right noises as far as consolidating their business is concerned. Their focus is on the core business, both auto as well as the farm equipment space, and they're looking to get rid of all their legacy businesses, even unlock more value for shareholders. Now, with this increase in Swaraj Engine stake, it gives M&M more control over the management. They have focused on growing the farm equipment business, not just on the top line, but reinventing the cost structure as well. In the quarter gone by, as per the latest data, they've gained about 1% market share in the farm equipment business. They had the highest domestic volumes of 112,000 units in quarter one, and the volumes itself went up about 18% on a year-on-year basis. prices. Also, M&M is very hopeful about a 7 to 8% compounded growth for the tractor industry over the next 7 years, and they're taking all the right steps in order to not just grow the top line but also come out with an efficient cost structure. Hence, it's a win-win for all three companies that are in focus today.
A win-win indeed. Let's move on to the third headline then. Yes Bank gained over 2% after the bank's board cleared the sale of its 48,000 crore rupee of weak assets to JC Flowers Asset Reconstruction Company. Ritu Singh joins in with the detail. Ritu, it's a CNBC TV18 news break that has now gotten confirmed.
That's right. As we reported earlier, Yes Bank has now said that it received no challenger bids to the 11,183 crore rupee offer made by JC Flowers ARC to acquire its 48,000 crore rupee NPA portfolio, and therefore in its meeting on the 20th of September, the board of Yes Bank has approved the declaration of JC Flowers ARC as the winning bidder, and separately they've also approved the acquisition of up to 19.99% stake of Yes Bank into JC Flowers ARC in single or multiple tranches. But importantly, this acquisition of stake in the ARC is going to be subject to regulatory, specifically RBI approvals. So we'll have to see how that pans out. However, for the transfer of the NPA to the ARC, no other regulatory approvals are required. So this paves the way for cleaning up of Yes Bank's balance sheet. In another important development, Yes Bank said that the Reserve Bank of India has approved the appointment of R. Gandhi as the chairman of Yes Bank for a period of 3 years. Remember, R. Gandhi, who was a former RBI deputy governor, was also on the board of Yes Bank for 2 years during the period of reconstruction of the bank. And now with the newly appointed 9-member board, R. Gandhi is set to take over as the chairman for the next 3 years.
All right, moving on from one bank to the other one. This one is the state-run Central Bank of India, surged by over 6% in trade today. This after the RBI removed the bank from its Prompt Corrective Action framework. Post this move, now the bank, remember, can operate without any restrictions. This allows it to also open more branches and grow their loan book. We spoke with MV Rao, the MD and CEO of the Central Bank of India, and he told CNBC TV18 that the asset quality will improve. The gross margins, or rather the gross NPAs, will fall drastically below that 10% mark in the coming quarters as well. Let's hear him out.
We will be coming out of the PCA because the measures what we have taken, and we know that it is only a matter of time, and also the confidence what regulator will be getting on our activities. That's why we have factored all these things when we have given this projection. I tell you, our gross NPA will be drastically coming down. The slippages what we are envisioning for the quarter of September will be around 1, not more than that. We have given the graded gliding path where from 3.93 we will be touching around 3.6, 3.55. In that range we have given.
All right, with that, we'll take a short break. But before we go, here's some more market opinion that we got today.
India market had been following very closely the S&P 500. And in fact, this was true of all EM Asia ex-China markets, very closely following the S&P 500. Since early August or mid-August, we've started to see that kind of diverge, but India has held up much better than the rest of the other markets, including the S&P. And typically, this sort of divergence wouldn't tend to last. So I would expect some catch-up there. We still like the financials, we still like the materials, energy companies, including in India, and we do think that that's probably going to be a place which does well over the next 12 months or so. But over a longer term, when you talk about 5-10 years, right, obviously these disruption areas become very important. India has seen a large amount of VC interest over the last 5 years, and eventually those companies will come into the stock market, and that will, peak retail interest as we go forward as well.
Let's talk about the fourth headline for the day then. Sebi chairperson says that the regulator won't allow products that curb exits or exchanges to charge for public data. In fact, she said that the Sebi is open to innovations like algorithmic trading, but the process must be transparent. Let's hear out Madhavi Puri-Bhuj.
If the regulator senses that there is inadequate disclosure, then the question is the investor being misled? This is a little bit more aggressive form of the same issue. Is the investor being conned? If your business model is going to rely on a black box which is not open to sunlight for disinfecting, if it is not capable of being validated and audited, and your claims cannot be audited and validated, it cannot be permitted. a business model which relies on the assumption that once the customer is in, it's very hard for him to get out, we don't like it.
That's the word coming in, loud and clear from the new Sebi chairperson. But let's move on to the last but not the least important headline of the day. A bunch of stocks were in focus, Triveni Turbine being one of them, gained over 1% as nearly 22% equity changed hands in a block deal. Promoters bought 10% stake, and Vivek Iyer is here with all the details. Vivek.
There was renewed buying interest and there was quite a bit of chatter as far as the stake of Triveni Engineering in Triveni Turbine was concerned. So at the end of the June quarter, Triveni Engineering held almost 21.85% stake, and the company had said that they had decided to divest the entire stake. So today, along expected lines, the entire 21.85% stake held by Triveni Engineering in Triveni Turbines has been divested. Now, out of that, 10% stake was bought by the promoters of Triveni Turbines. And very interestingly, the remainder of the stake, we had the management of Triveni Turbines tell us that very strong interest was seen. And in fact, sovereign wealth funds, both from Singapore and Abu Dhabi, as well as very large Indian mutual funds had participated. Going forward, they did mention that there could be more inter-se promoters transfers happening, so that the entire alignment of the management of Triveni Engineering and Triveni Turbines would be along the lines that the management has alluded to.
All right, Vivek, thank you for that. Sticking with the stocks which are in the news, KPIT Technologies was also in focus, rallied over 4% after the company assured, or rather acquired, a European-based company, technical engineering company, for about $80 million. Rima joins in with the contours of the deal.
Thanks so much for that. So KPIT Tech has made an acquisition of an EU-based automotive company called Technica Group. They will be paying 80 million euros for this acquisition. Over and above that, there is about a maximum of 30 million euros earmarked for earnouts over the next 2.5 years. The acquired company had revenues of 43 million euros, which roughly means that it can add about 10 to 11% of KPIT's annual revenues once fully consolidated. The acquired company also had EBITDA margins of 20%, so slightly more than where KPIT's current margins are. And the management has said the acquisition will be EPS accretive from day one. The acquisition will be closed in October of this year, which means in FY23, KPIT Tech will get the benefit of 5 months of consolidation of this acquisition. So it should boost the company's FY23 guidance, which stands at 18 to 21% in top line volume growth of 25%, as well as margins of 18 to 19%. So let's see what the company has to say about the updated guidance for FY23 post this acquisition.
All right, Rima, thanks a lot for that. The other stock on our radar was SpiceJet. Continues to decline as problems continue for SpiceJet as well. And this one, the most recent one, is the cost-cutting measures that the company has announced by sending 80-plus pilots on a leave without pay. Sonia joins in with more. Sonia.
Well, thanks a lot for that. SpiceJet has been under a lot of pressure because the company is going through a severe balance sheet crisis. We've been reporting this for the last several months, and the latest is that 80 pilots have been put on a leave without pay for the next 3 months. Now, the management does say that this is in order to bring down costs. Remember, the company was looking to raise funds for the last many days, but on the recapitalization front, nothing has fructified. If you look at the trajectory for SpiceJet, right, in the last 5 years, the losses have steepened significantly. In FY22 itself, SpiceJet saw a loss of around 1,722 crores in the full year. And there have been problems galore for SpiceJet. You had the CFO resigning a while back. It was the second straight month of delaying payments to its employees. The auditors said that there are some concerns that SpiceJet may not be able to go forth without raising funds. On that effect, the management has several times said that, yes, the fundraising plan is in action, but nothing has fructified so far. And the latest piece of news that 80 pilots have been given a leave without pay for 3 months just goes to show that the balance sheet problems are still underway. Also, other issues, like the safety concerns as well as the deregistration of some of their aircrafts by the DGCA has plagued the operational performance of the company as well. All in all, more disappointing news coming in for SpiceJet.
Disappointing indeed, but not so much for the paint maker, Dulux paint maker, Akzo Nobel, as we had the management saying that, they're looking at increasing their margins between 15 to 17% over the next couple of quarters. Importantly, they're also looking to gain more market share after having gained market share already. and be the number 3 player from number 4 that they are. And on those comments from the management, you can see there was a spike in the stock and it sustained through the day with a gain of 4%. Let's hear out what Rajiv Rajgopal had to say to us.
I still maintain that it will take a couple of more quarters to really see the softening in coming in really accretive from a margin perspective and from a P&L perspective. We've gained market share in the decorative paints, something that we want to consolidate and build on. Remember, when you look at decorative paints, we've got a very high share in the premium. So when you look at brand Dulux, we've got the Dulux Velvet Touch advertising going on. We've seen across all the channels, etc. So, that's a brand which has really revived very well, doing very well, having strong demand. Similarly, Dulux Weather Shield, which is our exterior brand, is doing extremely well. So, our endeavor has been to really, how do you gain, across in the mass market, where we are slightly underrepresented historically. We actually spend 3 to 4.5%, not 6%. Our endeavor is to come to 5 to 6% on terms of advertising.
All right, with that, it's a wrap on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV18.